Hello, everyone. Thank you for your second invitation. This is ZIKUN AO, and today I'm going to talk about ZTE Corporation, the 5G communication leader, its financial performance, and future industry trends. In my presentation, there will be 5 parts: company's background, industry analysis, financial analysis, stock evaluations, risk analysis, and conclusions. Based on this 5 parts, my recommendation for the company is a cautious buy. So let me begin with my presentation. Founded in 1985, ZTE was the Chinese large-list telecom equipment suppliers. It surveys more than 116 countries and regions. ZTE was one of the 4 mainstream communication equipment suppliers. In 2012, due to the reselling of a huge amount of IT software and hardware to Iran, the U.S. Department of Commerce imposed a restriction on ZTE. However, in 2018, the China-US war trading fractions also banned the ZTE again. ZTE currently have its self-developed equipment launched. Continuous expansion of 5G base station and the popularizations increased the communication industries. Due to September 2023, the total amount of 5G base station achieved to 3.18 million, which is 30% of the overall mobile base stations. At the same time, the domestic gigabyte network user achieved to 40% in China. ZTE's main company can be divided into 3 segments. According to its first half year of 2023 annual report, 67% of its revenue comes from the 5G equipment market, 10% with the AI industry, and the rest of 23% come with the Stellar and the OA industry. Specifically, ZTE was focusing on the 5G equipment market. In 2021, the 5G equipment market, Huawei and ZTE ranked first and third, with a combined market share 51% dominant the market. The rest of the ZTE data was in Figure 2 and the Figure 3 pie charts. And the third part is about the financial analysis. The consistent growth in both revenues and net profit suggests that the ZTE is not only increasing its sales, but also becoming more efficient and profitable. Also, for the raising EPS from 1.6 RMB in 2021 to estimate 2.13 in 25, indicate that the company is become more profitable, which is a favorable sign for the investors. Also, for the stable ROE suggests that the ZTE is maintaining its efficient in generating profit from shareholders' equities, and the slightly growth ROA from 4.3% to 4.9% indicate that the company is generating efficient from its earning. Also, ZTE is spending gradually in R&D expense as the market share continues to grow to 43.5% at the end of 2023. The fourth part is about the stock evaluation. Based on the DCF model, my calculated WACC is 8.4%, and my long-term growth rate is 3% due to the GDP growth. Based on these 2 methods, I can calculate the free cash flow. And the fair price that I calculate is 36.37% market per shares, and the current price is 27.21 per shares, which there is a 33.66 ongoing growth. So my recommendation is cautious buy the stock. There is also risk for ZTEs, as they're putting a lot of effort into the AI generating department. However, there's always possible that the technologies will not performing as expected, or the development will take longer and cost more than anticipated. This risk may further cause the market acceptance and cash flow problem where there's no guarantee that the market will accept it, and as ZTE is spending much of the asset on the least revenue generating part, cause the ZTE spending faster and the capital coming in. Based on my stock evaluation, company's industry analysis and performance, my suggestion is a cautious buy on the company's stock. This is all my presentation, and thank you for listening.